So Hims and Hers, unbelievable. We're going to go through the earnings. You guys asked for a review of earnings and we're going to do that for you guys today. First of all, I'm going to go back to this video. This video I made 3 months ago, on May the 11th, 2022. We called it Hims and Hers, unbelievable once again. And this was a review of earnings. It was 11 out of 10 earnings. I talked about how good these numbers were and everything going on in the business. And same again, we're 3 months later. It's another 11 out of 10 earnings from Hims and Hers and we're going to have a look at it. But I thought this was really key because I want to show you where the market was in May the 11th, 2022, because we had a business like Hims and Hers pulling out 11 out of 10 earnings, but yet the share price was getting absolutely demolished. It was at 52 close. There was a lot of negativity in the market. Now in that time frame, there was a lot of fear out there and there was a lot of people making this mistake at looking at stocks and businesses like this. And if we said this is the share price, let's say the share price was going like this, the share price was declining, people looking at that going, okay, that's a really bad investment, I'm not going to buy that, look at the share price rather than looking at the fundamentals. And Hims and Hers was one of those that a few months ago we were talking about it, 11 out of 10 earnings, they've come out again with 11 out of 10 earnings, and financially the business was going like this. And you get this in the stock market, you will get times where the financial performance of the business can go like that and the stock price can go like that, and those are the times you want to be capitalizing on. Unfortunately though, when I made that video 3 months ago, and this is very much, I could have done a few of these actually about different stocks, and there was a lot more negativity I could have chosen, but a lot of people chose to look at this stock and go, it's a bad business, look at the share price, and they didn't look at the financial performance. And you had comments like this from London MF, who said that in these markets, revenue without profitability means nothing, and generally just a lot of negative view on this stock, and that there will be a time in future when growth stocks return to favour, but no time soon. There was another comment here from Mark Foley which says, what do you make of this news? There's 6 analysts here that are going to expect it to not make profit even in 2024. We'll talk about that in a minute. James Taylor, who said there's no rush to buy anything at the moment, we're in a bear market. If you don't buy a stock tomorrow, you won't be missing out next week or even next month, etc. There's a comment from Andy Pickering who had this saying, are they investable with the ROIC at 52%? There was comments from Patrick A, who said nothing bad, it's a 43% miss on EPS. Massive share dilution, higher than revenue growth, yeah, all good. We got revenue, my revenue at price to sales, judging that business like that. And you had a lot of these people just being negative. This has been it, and this has been so much negativity on the channel in the last few months. A lot of people judging on these business on the share price performance and not the financial performance. And let's look at this stock price right now. So when I actually made that video, you see here that I made the video on the 11th of May, and you saw that negativity there. It fell down to $3.11. There was all that negativity on exactly that day, and look at the share price right now from that day, currently up 129%. All that negativity, a lot of people, there's a lot of comments I could have chosen, a lot of people saying in that comment section saying that the stock's done, there's no rush to buy, and look at that. You got to look at the financial performance. It was only a matter of time before we saw some jump like this, and when you look at the valuation of the business, and that's why if it's a business you like and that share price gets lower, all you want to be doing is dollar cost averaging into that business, especially when you could have had it around $3.11, and well done to you guys that capitalized on that. So let's get stuck onto Hims and Hers earnings. Hims and Hers, unbelievable, another 11 out of 10 quarter. I can't even keep count of how many 11 out of 10 quarters these guys have been pulling out. We talked about 3 months ago, we talked about the fear and stock price. Let's get stuck on some of the numbers. EPS in line, revenue was a massive beat. I think it was like nearly 10 million or something insane. It was like 10% above consensus. Insane. Outlook was key. Obviously, one of the big things is that you want to have a good outlook. And I looked at Hims and Hers, and they were coming into this earnings report on first of all, a Q4 that had a very high guidance that was put into it. You know, analysts were expecting a decent 2022, and Hims went, nah, we're going to beat that. And the outlook was hiked up massively. And if you guys hop back to that earnings about 6 months ago, I said, you know, I'm a bit worried, you know, they've hiked it up so much, can they continue to beat it? And then we went into Q1. What happened? We made the video that I just showed you, Hims and Hers Unbelievable, the first edition. And again, it was amazing. They beat it, they hiked up guidance again. Going into Q2, I'm thinking they've hiked 2 amazing hikes up here. What are they going to do again? Hike it up again. Revenue, absolute hike up. But one of the key things that was absolutely amazing in this one was the EBITDA hike, and we're going to talk about that. So Q3 looks like we could have another little bit of a loss on the EBITDA. They're not losing crazy money, which is fine, focusing on the revenue growth, and they've got an amazing clean balance sheet which will help them, use that cash up. They've got a really good balance sheet. And by the way, can we just point this out? This business has done all this in 5 years. It's unbelievable. But yeah, the EBITDA was hiked up, and the key thing is that you looked, and I worked this straight away out in the conference call. And I'm going to jump down to this last point, which I should have put a lot higher. I looked at the EBITDA and I went, hold on, there's some profitability forecast in there. And what do you know? They said that they have forecast by Q4, they should hit some profitability. Q4, profitability. That is a game changer, because what we'll have here is we've got a business here that just grew 87% growth. 87%, that's insane. That's insane growth, 87%. They're holding 77% gross margins. So we've said for a while on this channel, the gross margins are absolutely fantastic. That's going to lead, at the moment they're hiking up the marketing and they're capitalizing on the opportunity while they've got it, keeping that growth up there, and that will drive more profitability in the future. And with them gross margins, it's very easy for them to get to profitability. All they need to do is slow down like the marketing, for example, or not expand as much on what they're investing back into the company. They hit profit really easy. And we've been saying this for a while, insane margins. So you got a company here with 87% growth, you've got 77% gross margins, now offering profit in the next 4 quarters, especially potentially in Q4. Now, when you've got a business here at 87% growth, it's got a clean balance sheet, it's starting to ramp profitability in. I've seen this before. I've seen this before with a few stocks, Tesla, Shopify, Square. Them 3 stocks had insane growth and then they hit profitability. I can tell you right now, when you have a business, a stock that grows at insane rates, a clean balance sheet, and then you start ramping up profitability, all them little negative people that have been going, I can't touch that because it's not profitable. I can't touch that, it's not profitable. Oh, it's never going to make profit. And then you actually have a business that grows at insane rates, and then the profit starts growing at insane rates. You start going, people going, look at Hims and Hers. Look how good that business is. I'm going to have to buy that. And then you look at the times when it was $3 and you're thinking, I capitalized on that. And that was the insane part. Profit forecasting in one of the next 4 quarters, or starting to get to profitability, and potentially by Q4. So we could potentially be 6 months away from seeing Hims and Hers hit profit, and then we have a total different beast on our hands. For you guys that have been here for a while, that's not going to surprise you. You've seen this story here, and the profitability, analysts were saying that they won't hit, profit in 2024. 2024. They're going to be hitting it in 6 months, guys. And that's an insane number, a milestone if they hit it. So let's look forward to that. They said that in this quarter, they capitalized on marketing. They said that marketing was very favorable to them. They capitalized on it, they got the returns from it. And as well as that, the payback is still sitting in between 6 to 12 months, which is insane. So they did very good marketing, and that what helped the growth be absolutely insane, and the payback was great as well. They expanded with CVS and Walgreens, 2 of the key partnerships here. Is expanding with them too. Obviously, that's where you want to be in. But the big thing with expanding with Walgreens and also CVS is it is going to just take the gross margins down a couple of percent potentially, because you're actually selling physical products rather than the healthcare online service. However, the big thing is the benefit is people walk into CVS and Walgreens and they see this product called Hims and Hers, and they see another product called Hims and Hers, and another one called Hims and Hers. People start recognizing, I know that brand. They're a good brand. They're selling CVS, they're selling Walgreens. It becomes a more well-known business. What's that going to lead people to? Trusting that online brand, going to that online brand and going, oh, I know them, they're in Walgreens. And that physical location presence also helps their online business as well, which is great. The hair care new expansion had 7,000 new stores or locations, which is once again absolutely fantastic. They launched 2 new apps. They launched a Hims app and a Hers app, and they're saying that they're seeing 3 times more engagement on that app, which is obviously fantastic, is that people are engaging more than the website, using it more regularly. Obviously that could lead to them buying more products. As well as that, that was on the iOS. There is going to be the Android version launched, I think in the next quarter, I think they said. Double check that, but I think it was the next quarter they said. And also profit potentially by Q4, which would be absolutely insane, which we talked about earlier. There's a few other points that I could potentially put down here, but those are a few of the key points that were from the earnings call, which was fantastic, and the earnings in particular were great. So yeah, just wanted to talk about this one because I know you guys wanted a video on it, and also just a point of view of like, you know, the market is definitely always best to buy when there's the most fear out there, and 3 months ago you saw that. So well done for you guys that have been buying the opportunity of HIMS in like $3. You got the rewards at the moment, and I'm sure that even if we have a bit of a pullback going forward, the valuation that it was at 3 months ago was just absolutely insane. So yeah, hope you enjoyed the video on HIMS anyway, guys, and as always, hit that like button. If you're new, subscribe. If you are on the Patreon, I'll do a full earnings video for you guys very soon, talking about some stocks that reported earnings, obviously like HIMS, Disney, and everything like that. So yeah, hope you enjoyed it anyway, guys, and I'll catch you in a bit.